But first, a court in Hong Kong has ordered Chinese property giant Evergrande to wind up and liquidate its assets. That is after failed negotiations for a restructuring plan to satisfy its international creditors. Evergrande has some $300 billion in liabilities. The order comes more than 2 years after the company's official default, which triggered a crisis in China's real estate market. Trading in Evergrande's Hong Kong-listed shares and 2 of its subsidiaries were halted after that ruling. Chinese financial regulators are marking an end to the first month of 2024 by vowing to shore up the country's property market. The National Administration of Financial Regulation is making the real estate market a priority this year. They're aiming to provide better support for cash-strapped developers and mortgage policies that can help more households. The People's Bank of China announced that it would inject $141 billion of liquidity by slashing the reserve equipment requirement and lowering the relending rate for some banks. The property sector, together with construction, materials, and home appliances, contributed almost a quarter of the country's economic output. In terms of added value, its share dropped to 5.8% of China's GDP in 2023. That's according to government data. Let's take a closer look at China's housing sector. Joining us to discuss all this is Yan Liang, the chair professor of economics at Willamette University. Yan, thanks so much for joining us, and nice to talk to you again.
Good to talk to you, Francis.
Well, first of all, before we get to these new policies, I'd like to put China's real estate climate into context for our viewers. For the past few years, homes have been left unfinished. Developers have defaulted on their debts. How did we get here to this point?
Right. So as you recall, this really booming of the housing market really started in the late 90s when China started to, experience this rapid urbanization, where the urban population has gone up from 400 million to over 900 million. So there's a lot of demand for housing. And this is also the time when housing became commodified, meaning that in the past, the state-owned enterprises provide, flats, apartments for, their workers. But in the late 90s, when we have the state-owned enterprises reform, housing also become commodified. So this is a golden year and golden era for the real estate sector to grow. However, I think the real estate developers become really over-leveraged, and some of them become too big to finance. And that really created a lot of problems like overexpansion of, the housing constructions and with a lot of vacancies, and also housing prices start to skyrocketing. The housing value to the average household income was 20 times. So it's clear that the sector needs to be readjusted, which prompted 2021, the 3 red line policy, which is basically restricting the lending to the real estate developers. And so that really started to trigger the entire, the real estate sector readjustment. But that said, I think, again, in the grand scheme of things, the sector needs to be readjusted, and China needs to find new growth engine, in, for example, advanced manufacturing and green transitions. And so I think that's where the Chinese economy is at right now.
So now I want to get into those new policies that were announced by China's financial regulator. How do you think, in your opinion, these will help both developers and buyers looking to buy new homes? And will they be enough?
Right, absolutely. So I think it's clear that the financial regulators and authority, their main objectives are 2. One is to ensure the delivery of the unfinished projects, which, the consumers, the households have already paid down payment for, so they need to get their houses. This is very important for economic and social stability. And second is they do want to stabilize the housing market. Now, the policy intention is not to revitalize the housing market, to go back to the old way, but rather they do want to stabilize the housing market. And the way they have been doing it, one is to make sure the liquidity is enough to finish some of these unfinished projects. And second is to make sure that, they relax the purchase and mortgage rates for these home buyers. So that would help to put some floor on the demand. And finally, I think it's important that the government has started to initiate public housing projects and also shantytown revitalization. They have set up, special funds of 1 trillion Chinese yuan to start. And so all of these, I think, are very important to, stabilize the housing market and make sure that, the people who have paid for the housing would get their houses.
As you know, land sales have been a major source of revenue for local governments in China. We mentioned earlier that the property sector contributed almost a quarter of the country's economic output. Can you expand on just how important this industry is to China's overall economy and health?
Right. So yes, the housing sector is very interconnected. It has many downstream and upstream industries. So, with the housing supplies, materials, cement or steel production, to the downstream where you have household appliances, furniture. So all these are tied to the real estate market. And that's why the estimate is the real estate and connected sectors will account for about 1/4 of the Chinese GDP. But at the same time, I think it's clear that the local governments a lot of times rely on land sales, which account for about 30% of their fiscal revenues. And so that's why the real estate sector is so important. But again, like I mentioned earlier, China has to pivot away from the old model where you have these constructions that sometimes could create excess capacity, and also speculation in the property market. So the new growth needs to come from elsewhere, like green tech, green energies, and also advanced manufacturing. And for the local government debt, I think that is also very important because the local governments are very important as both boost local businesses, but also provide essential social programs and public services. So I think the central government needs to do more to provide necessary fiscal resources for the local governments to both restructure their debt, but also to continue to provide the necessary social services and growth boost to their local economies.